Welcome back. You're watching India Tonight and I'm Sumita Khare. Let's take a quick check at how the market performed today. Well, it was a day of sell-off for the Indian markets. Nifty closing the day below the 22,000 mark, down over 1%. ICICI Bank and HDFC Bank were the top tracks today. The broader markets too closed in the red. This on the back of news flow on SEBI asking mid and small cap funds to disclose more information about the risks involved. All sectoral indices closed in red today, with energy and PSB stocks bleeding the most. And let's now move to our other top story this evening. That is, SEBI has directed AMFI to protect the interests of investors in light of froth building up in the small cap and mid cap space. Anurag Joshi is joining us now with the contents of this letter that AMFI has written to stakeholders. Anurag Joshi, take us through the contents of the letter.
The surge of inflows in small and mid-cap funds has caught the attention of market regulator Securities and Exchange Board of India, which has now asked Association of Mutual Funds in India to direct the trustees of mutual funds to put in place a policy that will protect investor interest, and this will need to address steps that AMCs and fund managers need to take to protect the investors, and also issues linked to moderating inflows and also portfolio rebalancing. And also the measures that the mutual funds need to put in place will need to address in the investors that may suffer because of a surge in redemptions due to the first mover advantage from the first redeeming investors. And such a policy, AMFI said in a circular to mutual funds, needs to be put in place in the next 21 days.
And to discuss this further, we're now joined by Jeff Dennis, independent emerging markets commentator. Thanks very much, Jeff, for joining us this evening on ET Now. Now, I first want to take you through the surges that some of these indexes have seen in the past 12 months. So small cap index, Nifty small cap index has seen 77% surge, mid cap has seen 62%, and both of these have actually been higher than Nifty 50, which has seen a 26% surge. So these historic valuations are really historic vis-a-vis the global valuations. But what activity do you expect post this froth? Can FPI flows tap this turn?
Obviously, the small caps and mid caps have done very, very well. And it's interesting, I think, how you can contrast this with the US, where, as an article in the Financial Times said the other day, where you're getting tremendous breadth, I think, in the rally in India, whereas in the US, of course, it's very much more narrow, focused in particular on the so-called Magnificent Seven. I can understand the concern about froth developing when you get such huge improvements, just such huge increases in inflows and also in the level of the market. But at the end of the day, I think this has got a lot to do with the excitement there is out there amongst global investors about the opportunity in India, which I still think is very good. Now, valuations have gone through the roof in India. We know that the overall market's probably trading, according to MSCI India, around 25 times trailing, which is very, very high. Some of this has got to do, I think, with the relative stability of the rupee, which is not really weakened that much in the last 12 months. And also, without doubt, some switch of foreign money from China, which, of course, is doing so poorly. So I don't think the Indian authorities should overreact to this amount of money coming in, because eventually it will adjust itself. If necessary, the market will come down again. I think it's got a lot to do with the success of the Indian story and the interest in the Indian story from foreign investors.
Right, and rightly put and rightly articulated that this is, of course, due to a lot of interest that global investors are showing in the India story. I want to now understand, as far as domestic flows are concerned, are you really concerned about a surge in redemptions as a result, and could domestic flows and liquidity be impacted?
I think that it could, flows could very well be impacted in the short term, and I think this new letter, if you like, from the SEBI, I think is going to be a factor that potentially does slow things down. I think the case for domestic inflows continuing to be strong is maybe less clear cut than the case for foreign inflows continue to do well, given the points I've made: the demise of China, relative demise of China, the stability of the rupee. When you look at these things domestically, obviously there are still challenges. There's uncertainty over the election, although I guess we know what the election results going to be. Inflation started to tick lower again, but when will interest rates come down? And you still have a challenging fiscal situation. So I would be more worried, I think, especially given this latest quote unquote letter from the SEBI about domestic flows possibly slowing down into the market than foreign flows. I think foreign flows are going to continue to come to India over the long haul, because basically this is one of the best stories within the emerging markets.
Right. And I want to also ask you, Jeff, about when you say that, domestic flows could be impacted, but there will be continuous liquidity as far as foreign investors are concerned. But what are the challenges as far as investing in the India market are concerned? What immediate challenges do you foresee? You mentioned election is one. And you also mentioned, if I may add to this question itself, you did mention that the markets will correct themselves. How soon do you expect some sort of a correction to come in?
Oh, I think that's always a dangerous game, and I'm not prepared to, give you some sort of timeline. I think what is worth pointing out, though, is that there's just a hint now the US market, which drives so much in global markets everywhere, not just in India, is beginning to lose a little bit of momentum. And your listeners will know very well that this has got to do above all with the fact that investors are now repricing the possibility of Fed rate cuts down to perhaps 3 rate cuts this year, or who knows, even less. So I think you would have to see the US market stabilize and continue to rally for India to continue to do well here. And I do think that will probably happen over the course of the full year. A weaker dollar would also help. So flip that around, what is going to cause, I think, the Indian market to correct would be, as I say, valuations just get too high domestically. We see little prospect of, if the market sees little prospect of interest rates coming down, and above all, if there were to be a decent sell-off in the US and the dollar, continues to tick higher, those would be the factors giving you the risk of a correction. And all I would say is I have no ability to indicate when that might be. I'm just giving the arguments for it. But at the end of the day, I think you have to remain, given the narrative, which is the global economy looks okay, especially in the US, and India looks okay, certainly from a global economic growth perspective. And I think the dollar is overvalued and will eventually come down, and the Fed will eventually cut rates. So any sell-off we get on excessive valuations or too much froth in the short term is going to give you a buying opportunity. And I think investors should be focusing more on that as a long-term factor with respect to the Indian equity market.
Right. Jeff, thanks very much for joining us this evening to discuss this very, very crucial story. So Jeff Dennis, independent markets commentator over there, saying that domestic inflows could be impacted. But of course, foreign portfolio investors are exuberant, and the exuberance around the Indian economy is, of course, not getting affected anytime soon. However, there are challenges, near-term challenges that really could trigger some sort of an investment impact. However, the larger India story, he remains bullish on that. And moving